Perfect. How you doing, friends? Excuse me. This is Coach Ernie, and this is Zero DTE War Room. This is a show that's on every Monday, Tuesday, and Wednesday. The format is that each week we'll have a 3-day series. And today, this week, we're starting off with routine. So today will be about our preparation. Tomorrow will be about execution. And then Wednesday will be about reflection. So that's your daily trading routine. Of course, through this entire thing, we'll also be looking at the market, looking at zero DTE trades, looking for setups, and so forth. Last week, we had 3 different setups. One that I showed you that I took that made 255%. There were others that we had throughout the week that all were similar trades, some that came close to pinning. And in future shows, we'll reflect back and show you the results of those. In this type of market, with all this volatility, there's opportunities every day. As volatility goes down, those opportunities become a little bit more constrained, but we still have opportunities every day. So you got to stay tuned. What we do here is zero DTE trading out of the money butterflies. Very different than what you're probably used to. We're not into the high probability strategies that require you to put in more inordinate amounts of risk to get a tiny little profit. In fact, we do the exact opposite. We take a very tiny little risk for potential for very large profit. So a typical trade that we make would make anywhere from 200 to 400% on our risk, and going up as high as 1,000 to 1,500%. All of those are possibilities in this type of trading. Now, the key is that because we take such small risk, our drawdowns never really hurt us at all. In fact, we can sustain sequential losses 9, 10 in a row, which is possible. I'm not saying it's going to happen, but it's possible, and still stay within our 5% drawdown limit. What does that do for you? Allows you to stay in the game, skin in the game. It allows you to maintain your composure. You never get into that panic mode. You're cool, calm, collected, making rational thoughts, unlike most other trading methods where you're constantly focused on risk management. Now, does that mean we don't do risk management? Of course we do. But our risk management is built into the trade. All right, so that's enough about the strategy. Now we're going to talk about what we're here for. Today, we're going to cover what we do pre-market in order to get ready for a trade. Now, what is the most important thing that we need to know for our type of strategy or any type of option strategy? That's volatility. Why? Now, here's the differentiator between the way we do zero DTE and virtually everybody else does zero DTE. When volatility is high like this, all the other strategies are running for cover. We don't. We run into the fire because volatility makes us stronger. And all the other strategies, when volatility is going up and down, they don't really address it. They trade the same way all the time. We don't. We optimize our trade based on the context of the market and the level of volatility so that we can get the most out of it. What they don't know is that volatility, or they don't pay attention. Maybe they know it, I don't know. They don't pay attention to the drastic effect volatility has on the rate of premium decay and exactly what that means to your trade every morning. So that's what we're going to look at this morning. So our primary task is to look at 2 different things. We need to know where and when and why we're trading. That's 3 different things. But we need to know where the volatility is so that we can right-size our trades. And we need to know where the opportunity is going to be. And the way we figure that out is by analyzing the market structure. And here's another way that we differentiate from everybody else. We don't look at technical analysis or trend lines or putting up CIT or CTI, whatever that crap is, looking for, fair value gaps or anything like that, because that's all bullshit. Am I allowed to say that? I am? Okay. We look at what is objective, actual support and resistance based on where the market structure is. And the structure of the market is well defined by volume profile. So if you've been following me for a while, you know that I was really one of the very first people out here talking about volume profile. I've been doing it for 15 years. And in fact, if you go to my YouTube channel, you'll find I have a volume profile course there, which is the second version of it. The first version, unfortunately, years ago was taken down by some person that stole my identity. But that's one of my more popular videos right now, talking about volume profile. And you'll find that I have probably 100 videos on volume profile. So every day we'll be talking about that here as well. The other thing that we're going to do in these shows is introduce you to a new tool called Fly on the Wall. Now, fly on the wall, that's play on words. Fly, and you think buzzing fly, but really it's about butterflies, but we can hang on to that fly metaphor. And wall, talking about gamma walls. So we put it together, fly on the wall. So that's the cutesy reason for the name. But the tool itself is kind of like a sidecar to your brokerage. And it provides option and analytical tools, some that you've never seen before, others that look a lot like the tools that you've used before, like on Thinkorswim or other places, but on steroids that are just so far superior to those tools, you'll wonder why they don't do it themselves. And we also combine with that other analytical tools with the risk graph and so forth, and alternative views that are going to blow you away. So Fly on the Wall is the tool that I developed, and that is part of our Fly on the Wall service. Our Fly on the Wall service is all about teaching you how to find convex trades, find highly asymmetric trades, small risk, large potential reward. And the Fly on the Wall tool is designed right around what our subject matter is today, which is routine. So you may be wondering, what is the secret to becoming a successful trader? What do you think it is? And why do you think I'm starting off with routine today? That's right. Routine is the number one secret to a successful trader. And turning that routine into, a ceremony or a series of habits. That's essentially what it is. It's a series of habits that you string together throughout your trading day. And there's three basic groups of those habits. There's the preparation. There's your execution. That's where you're actually trading. And then there's your reflection. Your reflection is your trade log and your journal and so forth. And so we'll be covering each one of those today, tomorrow, and Wednesday. So in terms of preparation, as I said, this string of habits that you're putting together, we'll go into that in detail. But I want to emphasize your performance, your success, your ultimate success is your ability to internalize that routine, to find all the fundamental things that you have to do in each one of those groupings of habits that you're stringing together and practice them. Do I have a cough button here? I think I do. Hold on. Sorry. And that's the secret. Getting that routine down and perfecting it over time, it's never really perfect, is the secret to your success. 100%. Every professional trader knows this. And it's the reason why most people that are trading never really advance. And that is because they don't put the emphasis on what that routine is and practice it with the fervor that they should be. So first part, like I said, is preparation. And in our world, that preparation, as I said, is looking at volatility and structure. So the first thing we're going to do is take a look at volatility. And let me switch over there. Oh, cool. Went right to it. So there are three fundamentals, and I'll say this again, for us getting into a trade. We need to know volatility, market structure, and direction. We always trade with the direction, the trending market. But that doesn't mean that we know which way the market's going to go that day. We trade with the trend because there is an edge with trading with the trend. Even though on any given day, even in a trending market, it's a 50-50 shot whether that market's going to end up or end down. That's a very important point. So you may wonder, what about those days where it's going up? Like today, it's already showing that we look like we're going to break out. Because the morning, you can see here, let me get my little annotation tool out. Let's see, I'll use a little green one here. So we can see right here, the market's up in the morning. So does that mean we're going to have an up day? And should we be bullish? No. We're still looking at a bearish bias. What does that mean? That means that we're going to primarily be putting out of the money butterflies on that are puts below the market. But we're going to be looking for a reason to do it. And that means we're looking for an event to happen where price moves into structure. So if you have a downtrend, you're looking for a market that is basically doing this. Where's the best place to get in on a downtrending market? It's always on those pull up into structure, these things. So that's what we're going to be looking for. Now, of course, this is a day chart, so we can't really see exactly what's going on in the individual day, but we'll zoom in on it in a second. The next thing I want to do is I need to move some things out of the way here. If you want to leave comments, feel free. I've got my comments up here, so if you have questions, I'll try to address them if I can. Otherwise, make sure you leave a thumbs up, and we're going to go to our VIX. So I call this our VIX playbook. As I said, we're out of the money butterfly trades. That's our primary trade that you see right here in the middle of the screen. It tells us how to orientate our trades, how wide to go according to the level of volatility. Right now, we're in what we call Goldilocks zone. I actually split this up into two. This is Goldilocks 2 up here and 1 down here. So you can see we're squarely into Goldilocks 2. There's the market. And so that means that we're looking for trades that are 40 to 50 wide, butterflies, symmetrical butterflies out of the money. All of our butterflies that we put on, we never pay more than 10% of the width. So on a 40 to 50 wide trade, that means we're never paying more than $4 to $5 tops. I prefer to pay probably half that, somewhere between 5 and 10%. You'll find that 10% should be your max. That's what we call our 10% debit rule. But anything between 5 and 10%, you should be golden. In higher volatility times, you can definitely lean more towards the 5%. And you might think, but Ernie, coach, that brings us so far out of the money, we're never going to get inside the profit tent. That's not the point. And you'll see why in a little bit. So that's our first thing. Volatility determines our exposure to the market. And we expose ourselves when there's more volatility, and we narrow ourselves, contract when there's less volatility. And if you go back to last week's shows, I go through a great deal of detail about exactly why that is, and it has to do with the rate of premium decay. All right. Next thing is looking at the volume profile. So let's do that. And what you're seeing here, all these lines are structural levels that I annotated the volume profile with so that I could see where our structural levels are. Remember I said that when you're trading a downtrend, you're really looking for something like this to happen, where price goes down, comes up, price goes down, comes up, that sort of thing, right? That's generally what we're looking to do. These vertical lines here are the session markers. So this is Friday's session, and over here, this is today's session. The morning session is from 9:30 to 12:30, then from 12:30 to 2:30, then 2:30 to 4. We're generally looking to get in on this morning session. So we're looking for a bearish position. That means we're looking for move up into structure. And here, that's probably going to be something that looks like this. Comes up to this guy and then moves down. Now, this right here is what we would call a trading event. All right? That's what we're looking for. Could it go higher? Maybe up to the next structure? Sure. And so that's a possibility too. And we'll just have to see how the market pans out. But that is also another possible trading event right there. But we have plenty of time to figure that out, 9:30 to 12:30. And that's where we're generally taking our trades. Our trades are typically on for an hour to 2 hours. And if we're lucky, it goes right to the end of the day. And that means that we're not looking for a 200 or 300% return. We might be looking for 1,000% return or more. All right. So most of our trades are going to end before noontime gets deep. So how do I create these structural lines? I do that by taking a look at the daily chart. Let me auto-fit it. By looking at the daily chart and the volume profile and then finding all of the inflection points of that profile. What that really means is that I'm looking for those hills and valleys in the profile, the edges of nodes that I can mark up. Now you'll see that I have different colors. The reason why I have different colors is so that I can identify the tops and bottoms of nodes. This one should be red. So I make the bottom of nodes green and the top of them red. And then I make deep crevices and other features yellow. If there's features inside of a node, then I will color them blue. All right. So all of these features that I'm marking up will end up being support and resistance lines that are working for us in real time. This is how pros do it. This is how foreign currency traders do it. This is how I've been doing it for years. Now, I've been an institutional trader and a hedge fund manager and worked with pro traders almost all my career. Everybody that I know that is a pro is looking at levels. They're not looking at moving averages and trend lines and things like that. They're looking at volume levels. Jesse Livermore looked at volume levels, for Christ's sake. So this is what we're after. So once we've marked it up in the area that we're interested in, and it's important that you get all of the volumetric history in there because markets have memory, very important. You can zoom in to your 5-minute view, and then you don't really need the profile anymore because you've already marked it up. So here's a case where out of the gate, it moved up, never really hit the structural level, but has moved down. As far as I'm concerned, we don't have an entry event yet. So that's what we're going to wait for. So if it moves back up into this level, we'll wait for that to happen. And if it does, then we'll put a fly down here somewhere. I can demonstrate that. Let's suppose that price has moved up. So let's recap everything that I've talked about for our morning routine. We're assessing volatility and energies coming into the market. So let me first, you have to excuse me, bring it back here. I need the water. Frog in my throat this morning. So when I say that we're looking at just volatility, it's more accurate to say that we're looking for all the energies coming into the market. And that includes volatility and then other macro events or geo-macro events like economic reports, or at 10:30 we know that Chairman Powell is going to be on. I think he's speaking at Harvard today. So people like to listen to what the Fed chairman has to say because has the greatest influence on short-term lending rates, which generally points to what is the future cost of money. We're going to listen to him. We know that he's coming on at 10:30. When he comes on and speaks, the market hangs out, waits to hear what he has to say, because every syllable that he puts out is going to be linguistically analyzed. So I would expect that today the market's going to waver until he comes on, and then we're going to see sparks fly. So that's the first step. Know what energies are coming into the market. As I said, economic reports, the level of the VIX, and any other type of thing that might be happening today. Today we have a special treat with the Fed speaking at 10:30. Next is analyze the volume profile so you'll know where your structural levels are. Because even when the chairman is out there speaking and prices are moving, you'll still see price interacting with those structural levels. And that's where you're going to find your opportunity. Third, you're trading with the trend. Yeah, I know the market has moved up overnight in the Globex session since 3 a.m. Actually, since the market opened last night. The futures market opens on Sunday evenings at 6. And we went sideways for a little bit until it looks like the Asian market opened, and then we've been going up steadily. And then the European market opened at 3 a.m. and it's continued its move up. And now the American market goes up, and we have our first crack, and it looks like everyone's taking a little bit of a profit or whatever they're doing. But I suspect that we're going to probably flail around waiting for Chairman Powell to come on. All right. We have to also choose our direction. That's the number 3. So energy, structure, direction. Energy, structure, direction. That is our morning routine. There's more to your routine, too, that you should incorporate as a trader. Market readiness is probably the number one thing, but it's more. Market readiness includes 2 primary factors. One is your technical readiness, which I've been just talking about, and the other is your personal readiness. And that's equally as important. All right? Are you ready to trade? Are all your distractions cleared? Have you had enough sleep? Have you had your coffee? Are you calm, cool, collected, or are you an emotional mess? That's going to make a big difference in your performance. So you do whatever you have to do to get your constitution under control. Now, what a lot of people do is do something that will invigorate them, do some cardio or some other type of exercise. Doing some level of cardio and getting your heart rate up in the morning is probably the best thing that you can do cognitively for your trading. Because I don't know if you knew this, but by invigorating yourself for the next couple of hours, you've actually literally started the neural pathways from getting excited. Your exercise produces these chemicals in your brain that stimulate the production of these neural pathways, and you're literally smarter after you've exercised. So that's who wouldn't want to be smarter going into the trading day. Make sure you have good rest. Make sure that you're satiated, that anything that could take away from your ability, you want to try to solve that. So having personal, physical readiness as well as your technical readiness are absolute. That's all part of your morning routine. And if I understand that sometimes you get in the day and you're behind on everything and you're a hot mess and you just jump right into it, that's usually a recipe for disaster. Take the time to clear off everything from your desk. Notice my desk is nice and clean, beautiful desk. I've already gone through all my emails and social media, make sure that there's nothing there I have to attend to. I've gotten through all of my morning tasks. I'm also deep into development, so I make sure that I have a good understanding of where I am on those projects. I know where the market is. I've done my study for the overnight Globex market. I've seen what economic reports are potentially coming up. Plus, I knew about Chairman Powell coming on. I've already studied what happened at the Asian and the European Open and the futures market. I've already looked at my volume profile. I don't typically update that more than once a week, maybe once every couple of weeks. And everything was cool there. So I already knew coming into today what direction I'm going in, how big I'm sizing my trade, and where the opportunity is going to be, and what other potential things are going to come into the market that might change my disposition, like the Fed, or an important market report, or some other geopolitical risk. There is a war going on, isn't there? So all of those things are things that I make sure I have done when I'm approaching the market. Your readiness and making sure that you're in the type of state that you want to be in is going to make a huge difference in your performance over the long term. Can't emphasize that. And look, and if it's too much for you to figure out right now, I already gave you the 3 basics. Now let's include 4. Personal readiness, right? energies coming into the market, structure, direction, right? Personal readiness, and then technical readiness. Personal readiness, you break it down into whatever you want, but being ready is more important than, it's just as important as your technical readiness. You have to be aware. You're putting your money at risk. Now, why would you put your money at risk if you're going to approach the market in a not ideal state? It makes no sense whatsoever. And it doesn't take very much. Just take a little bit of time. Make sure you have a good night's rest. Get some breakfast in you. Get a little bit of exercise. You'll be smarter for it. All right? I know I may seem like a hag here, pounding on this over and over, but I will be talking about it virtually every day. There is nothing more important than having readiness, not just in the beginning of the day, but throughout the day, and knowing what you're going to do. So once we get into the market, we start talking about other things, other potentials. As I've been talking, the market has been slowly drifting down. Now, that means that maybe there are other potential places where we could have a trading opportunity. So let's take a look at that. By the way, if you have questions, put them in the live comment section, or if you want to leave a comment or a thumbs up, I'd really appreciate that. All right. So you can see we've moved down a little bit. One of the things that I do when I'm trying to prep for a market is I anticipate where there might be an opportunity. And as I said, it looks like we might have an opportunity down here. So I'll take one of these guys and say, I'm looking for something like this. But in addition to that, I look at what the total situation is. Now, remember I said that I used red and green to indicate the tops and bottoms of a volume node. The reason why I do that is so that when I'm in this view, I can see where those nodes are. And that's because I know that in volume profile, that if we're inside of a node, price is going to behave a little bit differently than when we're outside of a node. And the edges of nodes, it's going to behave differently there as well, as opposed to some deep crevice in the middle between nodes. Generally, between nodes where there is a vacate, where volume has been vacated, the market isn't as liquid. So that means that price will tend to move through those areas much more quickly. Very similar to what we're seeing here, some 4 big candles moving right through this lower liquidity area. It will probably find support right here at the top of this node where this red line is, and likely move up again, but it could also get in here. That's one of the scenarios. So I have to be prepared for any of those eventualities. So what I would typically do is plot that out. So I'm expecting something like this. Market's moving down pretty heavy. It's probably going to find some support here. It may try to move down. That might be one of the other types of situations that will happen. Of course, none of this is telling me whether or not I have a trade, but let's suppose that we do something like this. Yeah, I'm trying to get a hold of it. Let's suppose that we do something like this might be an opportunity for a trade, but I don't know. I still think that the market is waiting for Powell, so I would be more inclined to believe something like this might happen. So I'm here to really just plot these things out and be prepared. 10:30 is definitely at least into our trading session. Like I said, 9:30 to 12:30 is our prime area where we take entry events. So 10:30 is only 1/3 of the way into there. So I'll have patience and wait and see what happens. But I am not going to take a trade unless I get a pull-up into structure. So let's go over everything that I've said. Now, my overall routine is 3 big buckets. There's preparation, what we've been talking about mostly today. There's execution, which is the actual entry and management and exit of your trades. And then at the end of the day is reflection, where you log and journal, analyze, reflect on what you did. Why is that last part so important? You'll find out on Wednesday, but I'll tell you that without reflection, your entire routine is useless. And that's probably the weakest area that most of you don't engage in. That's what I found. That's been my experience as a coach for now. I've been coaching traders now for over 20 years, 25 years. That is the area where most people fail. And it's perhaps the most important, consequential thing that you can do in your trading. So keeping good logs, a journal, and then reflecting on what you're doing. And the reason why you're doing that is because everything that you're doing is about, as I said earlier, perfecting that routine, the whole routine. And the only way you can perfect it is by doing the work, reflecting on what you do, learning from what you learn from that reflection, and then adjusting the do part again. So it's like closing the loop. So without the reflection, you can't close the loop. Otherwise, you're just flying blind. So that's why this is all so important. Without instituting some sort of continuous improvement process, that's really what we're after. That's what the routine is all about. It is a continuous improvement process. It's also a lot like a scientific process, right? We're developing our hypothesis in the preparation. We're executing that hypothesis. We're recording the results. And then we analyze the results and learn from them and then create a new hypothesis. That's what we're doing. We're engaging in the scientific process. Every part of that process should receive equal effort from you. All right. I'm prepared. I know what I'm doing. I'm waiting for the event. And so prior to that event, I will start mapping out different scenarios. Those scenarios are important. And because first of all, I don't know where the market's going to go. I don't know how it's going to behave. I do know that 10:30 Chairman Powell's coming up, so I am less inclined to be aggressive right now until that event happens. Sometimes there is a out-of-the-box event that just is a no-brainer, even with the anticipation of the Chairman Powell coming on, but that doesn't look like it's going to be the case yet, and we'll see. Still plenty of time. All right. Still no questions. Any questions on this? I'd be happy to answer. Put your comments there. Say hello. All right? Love to hear from you. Make sure that you go down, click that like button, subscribe, and then you'll get notified every time that we have one of these shows. So perhaps we can show how we would use our fly-on-the-wall tool to add a trade. I would much rather have seen something happen before we do it, but this is as good a time as any. All right, so let's bring that up. All right. Okay, so let's take a look at what we have here. Where did the GEX chart go? It's on there. April. The GEX chart is there, but it has been moved. And I'll show you that in a second. Let's see. It's supposed to be right there. It's not showing up right now. Hold on a second. Just so you know, this is a brand new version of Fly on the Wall. And so we replaced the old MVP version, which was our minimally viable product, with this new version. So there's going to be a few glitches in it. So one of the questions that was just asked, where's the GEX? And I'm going to show you that right now. But I'm just contacting the AI to get to see what the problem is here. Anyways. The GEX will show up behind the risk graph. So here I'm showing a butterfly that I've put on, and there's a number of really cool aspects to all of this. Just waiting to see what the AI is going to say. It's thinking. As I said, this is the first day that we've put up this new tool here. So we're expecting little bugs here and there, and it's looking. Okay, so I'm going to show you some basics of the tool itself. So you can see that we can create positions here. I've created a position here. I can modify this position simply by clicking and dragging. I think I have some kind of tool going on here that is changing everything. That's weird. I see. So I installed presentation tools on here, and so I'm getting this weird effect that it's dragging everything around. Interesting. So I don't know if you saw that, but when I click this, there we go. Now it's off. All right. Yeah, I put this new tool in here. It's called the Presenter, I think it is. And that's what allows me to annotate the screen if I want, draw on it like this. But I think when I put that on, it did some other things that are interfering with the tool. So I'm still learning about this. First time, I just bought it this morning, or just picked it up this morning off the App Store. Okay, so let's talk about putting on trades. So as you can see, we have a trade defined here, a long call butterfly. If I wanted to put on a put fly, so this is what I'm waiting for. This is waiting for the AI to come back to give us our key feature here. Interesting. Let's see, where's the big head right here? There we go. I'm going to wait for this to settle down. Of course, they say never demo. So last night, just so you know, we've had the tool up and running now for the past couple of months. And last night we took our first candidate for production and we moved it over. And of course, when you do things like that, you never know exactly what to expect. And that's what's going on right now. Interesting. Okay, we'll go back to it. Tomorrow we'll have a much better demo. So what I wanted to show you was that positions are coming from this heat map that is supposed to show up here, but for some reason we're having some difficulties this morning. And we can choose our butterflies, or we can create them from here. For instance, I can create a put fly and put that, I don't know, somewhere below the market. All right, so there's my fly. If I want to adjust it, I can simply drag the legs like this. We got the heat map back up. Let's see if the AI is finding its way now. No. All right. So the way we would typically put trades on is that we would find them in the heat map. And let's say I wanted to put on a put fly. I would find the appropriate size that I want and put on that fly. It's just acting like a crazy man. Like that. And super glitchy this morning. I was telling I'm going to go back to the big head. So I was telling a developer that's working with me, actually he's my CIO, more than a developer. I said, today we're going to be introducing our new product off of staging, and we've never tried it on a live market. We've always been doing it behind the scenes. I said, I guarantee there's going to be a problem. And there you go. We've been using the other product with no problems whatsoever, just zipping through for the last couple of months. And then the one day that we bring that first one on, there's a problem. But it's totally solvable because offline it works great. So we'll see how that all goes. Let's get back to what we're talking about. And then tomorrow we're going to be talking about execution. So we'll have all of this figured out. I'll go over the steps again. You got to make sure that you have your personal readiness, your technical readiness when you're entering the market. I'm just looking at the AI is still doing its job, trying to diagnose the problem. When it's all running, it is unbelievably impressive. The heat map is in real time, and it's updating at about 5 times a second. Right now, it keeps on going into this sort of weird state, but it updates about 5 times a second, allows you to look at the entire options chain, and then you can find a position that has good convexity and just click on it, and it will create the position for you right into your risk graph, and then allow you to analyze it and then send it to the market, except for today. So anyhow, we're getting close to wrapping this up anyways. I wasn't planning on showing this, but I thought I would just give it a shot. So tomorrow we're going to be talking about execution. So we'll be using the tool quite extensively, and all these things will be ironed out by then. And we'll talk about getting into a trade and so forth, finding the entry event, executing the trade, managing the trade, and then exiting the trade. And then on Wednesday, we'll talk about the final step, which is logging, journaling, and then the continuous improvement process that we call the retrospective. And that should wrap everything up. All right. So I should have known better not to, let's see, we got some comments here. Yeah. So a lot of these people have been using the product for a while. And like I said, it was the old product, super solid and everything. And last night, I literally replaced it with our staging product, which has been running fine, but now it's in a new environment. And that's what's happening, everybody. By tomorrow, it will all be up and running again. So that's where we're at. Anyways, this is a good time to say thank you all very much. Take the routine and your preparation. I'm just thinking, how ironic that is. Take your preparation seriously, like I do, except for this. And we'll see you tomorrow. Take care.